Hi there, traders, and good to see you again, or should I say, good to see me again. Now, this will be part two of our three-part video series, and it'll be on stochastics and how I use them as a pressure gauge to assess the action between buyers and sellers. So sit back, enjoy, even grab yourself a coffee, and I'll see you on the other side of the intro.
This is part two of a three-part video series on my favoured indicators. Now we're going to take a look at the stochastics. What I've left on the screen here, you can see what we're discussing in part one on exponential moving averages and how we like to stay above for a buying scenario and below for a selling scenario. We've got our chart marked up with the same entries we were discussing in part one. And what I want to do now is just add in how we would utilize the stochastics for those setups, those particular setups. So what you can see, we've got the stochastic indicator in the middle here. I've got it set at 11 now. It's not particularly important what you have it set at. I use it more as a pressure gauge between buyers and sellers. So I'm trying to utilize that to identify when buyers are in charge or when sellers are in charge. Okay, so it's not your traditional way. So I know a lot of people might use it when price has gone to that oversold territory, they're looking for a buying opportunity, and vice versa, when it goes to that overbought territory, they're looking for a selling opportunity. Now, I like to use it, like I said, for pressure between buyers and sellers, and I have to couple that all the time with the price action. What is actually happening with price when it goes to overbought? What is it happening with price when it goes to that oversold territory? Okay, so if we can just take a step back and we'll mark up this chart with a couple of different areas. So we can see this low here. We're going to focus in on this low here, here. Mark that up. I think my mouse is running out. And we've got that when the stochastics and what the stochastics are doing at that stage. Okay, so like I said in the first video, we're biased up on this, particularly for support and resistance. We've marked it up and we're looking for that push above the MAs, and we're looking for the first pullback on what price does and what buyers do on that first pullback. So if we look at the stochastics and what price is doing between buyers and sellers, or the reaction between buyers and sellers when price is moving, we can see that at first push down. Okay, nothing particularly exciting about that. The market's pressed down. We've gone into the oversold territory. Okay, so buyers have started to take charge. They started to push price up, so the pressure is up from the buyers, and they push it to that overbought territory. Okay, so price is still holding a lower high there at that stage. But when the sellers start to step back in, they step back in. So at this stage, we can see they've pushed it. It's not down to oversold, but it is, below 50, which is not a bad sign either. And buyers have started to step in at a higher price. So they're soaking up that selling pressure at a higher price. So that's the important thing there. Okay, so what we see is buyers start to lift it again. It didn't go too far. It pretty much went up to retest the previous lower high before sellers started to step in. So this time round, you can see on the stochastics, it looks very much similar. So the selling pressure, they pushed it down to say 44 on the stochastics, or 40, that 40 zone. Okay, it's been moved up. So sellers have stepped back in again, and they've really tried to pressure it down again with just as much enthusiasm as that previous move down. But see what happens on price. First time, it reaches somewhere around 1570. The second time round, buyers are not willing to wait until it gets down to 1570. They're happy to step in at a higher price, which is somewhere around 1582. You can see across here, across the right-hand side. Okay, so that's showing that there's an improved enthusiasm from buyers. They're not waiting for price to push down to new lows or to retest the lows. They're happy to step in at a higher price. So they're soaking up that selling pressure, the same amount of selling pressure, but at a higher price. So to me, that's suggesting that this market wants to go up, or buyers are starting to move to push price higher. Okay, so what do we see after that is that same sort of buying pressure. Buying pressure's moved it up, off that 44. They've moved it back into that overbought territory. But as opposed to this time, the market has ramped up through the MAs or the EMAs and gone to a new high with respect to these previous highs in here. So if we just mark those up there, okay, so they pushed it up and taken out these highs. That's a good sign for the bulls. All right, so it's about this stage when we were talking about the first pullback. So we're trying to get price above the MAs. We're trying to look to be a buyer above the MAs when price retests the MAs or consolidates. Okay, so what we can see, we discussed this in the first video when price consolidated above the MAs, keep bouncing off the MAs. Now look what the stochastics is doing. Okay, so that's, like I said, it's our pressure gauge. So when we get to that overbought territory, okay, naturally you would probably assume there's going to be some selling pressure come in, but we want to see how the buyers react to that selling pressure, or how buyers react to that pullback. Okay, so selling pressure come in. What we did, we pushed it right down, or sellers pushed it right down, back down to that sort of 40 mark, or back down. They were targeting the oversold territory, really pressuring price down. But look what happened. Buyers were soaking up quite easily. So this time round, we didn't even really pull back. Price was really just consolidating sideways. It was getting soaked up easily. There was more buyers than at this stage stepping up to the plate, and they're happy again to step in at higher prices and soak up any of that selling pressure going from overbought down to oversold. And they were just lapping up quite easily. So you can see that the market pressed up, gone back to overbought, had another go. Sellers tried, they're resilient, they're trying again, they're trying to push price down, and it just didn't go anywhere. We actually held a minor higher low here at this stage when sellers were trying to push it down. And then we got at this stage here, when it started to tick off, we can see that buyers started to step in again, push it to overbought scenario, and that's when price really started to break to new highs. So that was about the stage when sellers, really gave up. Okay, they thought, we're not winning here. We've been trying to press it down here, press it down here, press it down here. You can see they were really giving it a good nudge here. The second time around, they really tried to press it lower, but it was just getting soaked up quite easily. So that pressure from the sellers, what we can see when in conjunction to price, or with respect to price was holding up quite easily. So any of that selling pressure that we can see pushing down on the stochastics was getting soaked up easily and was bouncing off the MAs. So that, to me, at that stage here, once you start to get more into that price action, it was really starting to get held up by those exponential moving averages. We've got to understand that every time the pressure is coming from the sellers and trying to push it down, price is going nowhere. Price is getting held up. Price is getting soaked up by the buyers. So we want to make sure that we're on the right side. And to me, utilizing that data, the right side is to be on the buying side. And that's utilizing that stochastics and the pressure along with price action and what's happening with the MAs. We know from that action and trying to understand what's happening there, we want to be on the buy side, and it's quite clear when price starts to expand higher. Okay, so if we just go a step forward and we utilize that same sort of theory in this secondary entry setup, we can see that price got a bit extended. You can see that the buyers were hovering in that overextended zone or that overbought zone. Then sellers started to step in. So it was about now either a lack of buying or there's more sellers starting to step up to the plate and pressure price down. Okay, you can see that by the pressure gauge or the stochastics. I like to use the pressure gauge. Pressing price down, goes to oversold, but again, like this scenario through here, price doesn't really go anywhere. Okay, so price just goes sideways. So again, that's just saying to me that the selling pressure the selling pressure is stepping up, but buyers haven't finished yet. Buyers are still willing to set up at that higher price, are willing to buy into that price above 1650, and are willing to push price to higher levels. Okay, and what we can see is that eventually it started to tick off again. We've got that oversold territory was still getting soaked up, and then either there's more buyers coming into the market or sellers just gave up. And the next time when buyers started to push it up, put the pressure on from oversold to overbought, price started to run higher. Okay, so that is a really broad overview of how I would use the stochastics more as a pressure gauge for overbought and oversold, as opposed to just saying it's overbought, I want to sell. It's overbought, I want to sell. I'm using that is the interaction between buyers and sellers and what's happening with price at that stage of the market. Okay, so I hope that helps. So for the next video, we're going to try to piece all those three together with the MACD. Well, we hope you enjoyed that, traders, and thanks very much for listening. Remember, if you did like our video, please subscribe to our YouTube channel for more great content and sign up to the website to get access to all our premium videos for free. Speak to you again soon.